This video is the Chapter 5 overview. This video overview is to give you an idea of what will be covered and what you should focus on in Chapter 5. It should not replace reading the chapter for important details or completing any activity. Chapter 5 focuses on consumer credit card purchases. Credit is more costly than cash. Having access to credit is a big temptation to overspend. Those are two things that you should always keep in mind about credit. You should never enter into it lightly. Some advantages of credit is that you can currently use the goods and services. It may be that you need a refrigerator or that you need a couch or something. So it does have that advantage. It permits the purchase even when your funds are low. It is a cushion for financial emergencies. You do usually get advance notice of sales, and you may even get discounts for opening the account. It's easier to return your merchandise usually. It's convenient when shopping, and it provides a record of your expenses. The disadvantages, of course, are the temptation to overspend, to buy a couch more expensive than you would have if you had paid cash for it. Can create long-term financial problems and slow progress toward financial goals if you overspend. Potential loss of merchandise due to late or non-payment, ties up future income, and the credit costs money, more costly than paying with cash. Those are all disadvantages. Before you use credit for a major purchase, you should consider the following. Do I have the cash for the down payment? If there is one, do I want to use my savings for this purchase? How does this purchase fit into my budget? Could I use the credit I'll need in some better way? Can I postpone this purchase? What are the opportunity costs of postponing this purchase? What are the dollar and psychological costs of using credit for this purchase? For instance, recently my homeowners association, we decided to take out a loan to complete the repair of our roads. By doing so, we felt like there was an opportunity cost there in that the cost of repairing the roads kept going up so much that we were taking a risk, but we believed that the cost would go up more than the credit was going to cost us. So you have to consider all of those things. Be sure that you have a general understanding of credit bureaus. Be sure that you are aware of what is on your credit score. You should get a copy of your credit score at least once a year. The Equal Credit Opportunity Act entitles you to find exactly what is in your credit report. So if there's something in there that's bringing your score down, you can contact that person, write a letter, do what you need to do to fix that problem. Contact all three credit bureaus to correct any errors, including any fraud that may have been committed. If you've been subjected to identity theft, more than likely that could affect your credit score. Monitor these reports at least on an annual basis. Don't forget that when you have made changes like this in your monthly payments, to use TVM that we learned in Chapter 2 to recalculate how you are doing in your budget. Make sure that your debt is still under the 20% that most credit counselors advise. If you have problems with credit purchases, if the store won't take the purchase back when it won't work, ask them to repair the item. If that doesn't work, then contact the credit company who will have to honor the request to stop payment, even if the credit comes from that company. For instance, furniture stores, many times the credit comes from that company, but it's not really from the company, it's from a third-party company, and they do have to honor that request to stop payment. And as always, as we've learned in our previous chapters, anytime you're taking out loans, for instance, if you've got 3 credit accounts, 2 credit accounts, and you decide that you want to consolidate and try to lower the interest and lower the monthly payments, you may want to go to a consumer loan service. And in doing so, you should always compare the consumer loan sources. Credit lenders are required to quote your interest as APR for easy comparison, annual percentage rate. Sometimes you get too many credit cards and you may want to consolidate, as I said, to lower the interest in the payment. Do a comparison using the form similar to the one at the end of the chapter. Again, do your research with several financial institutions before deciding which one is best. You will find that there may be differences in the interest rates across different institutions. And be sure to review that form so that you can see what kinds of things you will be comparing. The cost of consumer credit is usually stated as principal times time times rate, and that is your interest amount. So you will want to review how the cost of consumer credit works out. Be sure you pay close attention to that in this chapter. In fact, you will be doing some problems with this. Remember this, longer term credit equals lower payments, but a higher total cost. End of this video.